Welcome to Invest. We talk about investing, finance, and professional development. As the current time of 8:50 a.m. on Eastern Time on the 17th day of this year, 2023. I know it's a weird of saying this. Respect to Ethereum, $100,571, about 0.37% so far. On the overall crypto market, as you can see that on the left side of the spectrum, is leaning more towards a more of a consolidated fashion, not really moving up or down. But obviously, some of the selective altcoin are a little bit more up than others due to the fact that some of the micro affectation is driving some stir psychologically for investors. And on the equity side, we can see that with respect to today and the pre-market perspective, we are slightly down. Still consolidating us as well, like just, I would say trading very similar fashion to how Bitcoin or Ethereum are trading at the moment. On a daily right now, you can see that we're still relatively extended, looking for some level of cross down eventually. While on the weekly, because even more prominent, it seems like with respect to this reverse head and shoulder, it is looking a little bit more extended. So risk is definitely higher, but obviously with respect to why it's been driving up like this is because of the lack thereof in terms of I guess negative news. It's mainly just driven by the inception catalyst, which is the job numbers that came out I would say a Friday ago. So let's take a look at the news front real quick, shall we? So seems like across the news is relatively just kind of stale and muted. Obviously, we look at a lot of historical news at the moment. Goldman Sachs posts worst earning miss in a decade as revenue falls while expense rises. I mean, this is talking about Q4 last year, so not the true representations of what's happening at the moment right now. And with respect to other news, like Bob Pisani, this CNBC dude, it seems like he's saying some mixed signal stuff right now. This isn't a bull market yet, but it's starting to look like one. I do agree with that statement because of the technical momentum that we've been performing, right? I do, based on this is not a prediction, right? The technical does convey some sort of consolidation and slight depreciation in the near term until we see some sort of a rebound starting in Q2, just based on pure technicals on a months out, right? So I guess this is kind of fair, right, in a way. And then some of the other price calls, it seems like some analysts are calling Apple, Tesla, Amazon, like all the all the big companies are based on their price adjustments to see how they're going. So with these price adjustments, it will obviously have some stir into the market, but seems like as of the moment, it's not released yet. So we'll have to see how that goes. And also, these news are relatively just, you know, trivial and nothing specific. And also something that I just know personally, based on, and this is not Chinese news, but I talked to one of my friends in China this morning. It seems like the COVID, has alleviated the policies. So it seems like the lockdown's no longer in China. So people are slowly going back up. So the consumer retail side is definitely rebounding on the Chinese front, which is good. And also, obviously, as we know, Chinese New Year is happening. And I believe Chinese New Year happens on this coming Sunday or Saturday. I think Sunday for us, but Saturday for people overseas in China. So basically, it means that we will technically have about like half of month off of February because of just Chinese New Year. People are typically taking off, right? So not that's just more of a macro thing, more of a festive thing, but it will obviously have some hindrance onto the top line revenue projections, but also with respect to the earning projections. And also Q1, as we know, based on historical, is typically more of a muted quarter in comparisons to other quarters of the year, right? So let's take a look at the whales on what they have done recently, by the way. So it seems like just take a look at the BlackRock and ARK Invest report. BlackRock was a sell day last closing day, so which was Friday. And ARK Invest was more of a, I'll say neutral, but definitely more heavier sell than buy day. And with respect to going back to the technical, We are looking at Ethereum at 1571. You can see that clearly as of the trading time of basically 9 a.m. on the Eastern time, we are very extended. You can see that extremely large separation, very large leap up. We are looking to kind of consolidate and come back down on a daily. Weekly is also quite apparent. You can see that we are consolidated, gliding on sideways fashion. The next level leap up is 1650, all the way up to 1750, and we are like kind of doing a grind right now. And what we need to do is kind of come up, right? 1650, come down to 1450, forming a higher low, and then go up again to the next level of 1750, ideally going all the way to 1550, and then come down again to 1650. So we have to do like this zigzag up, down, but each of the steps, the down steps, would be forming a higher lows. Okay. And on the monthly, again, right, we talked about this. We understand that the technical has been quite flat on the monthly, right? Again, monthly. So it is looking like we are about to form some sort of a reversal coming, which is what Bob Bassani from CNBC talked about in that mixed signal verbiage. But in a more specific tactical perspective, I think ideally in Q2, Q3 would make a lot of sense for us in terms of seeing higher elevation of the price point. And then on the Bitcoin side of the equation, you can see that on monthly, it's quite separated. Weekly, it is looking quite separated as well, but on the opposite side of the spectrum. So daily is very extended. We are at 90 out of 90. Very risky in terms of buying now. On the weekly, you could see that similarly. We are getting blocked at the moment. So what we would need to do is like to go up and stay at this level, but you have to sell down to back to 19,500 again, and then go up to a next level up, ideally at the 22,500, and then come down again to the 21,500, and then go up again. So do it as exact fashion again, right? Do that escalator step up from here. Okay. So it's a quicker one than usual because I think we kind of have this thing going that we've been just regurgitating, revisiting the technical analysis. So we have a good sanity check every single day. And obviously, with respect to what we need to focus on in the next couple of weeks is really one on the 31st and the 1st is the FOMC meeting. And then coming up would be some of their earnings and obviously black swan news that might happen around the FTX debacle that is still kind of being solved. And how are people thinking about the tax season coming? So a lot of things that's up in the air right now. But it seems like the COVID situation is slowly subsiding. So that's good, right? And also with respect, again, this coming Thursday, right? We will see how the debt problem that we have in the US will be looking like. Are we going to be crashing? Are we going to be elevating? Are we going to get a surprise? We don't know. But I think based on just the technical purely, we should see some normalization and some depression coming before we ramp up. Okay. So I appreciate you. Have a good day. And I will check you on the next one. Take care. Bye.